Welcome back, you lovely people. I hope you all had an amazing weekend, at least as good as can be expected given the carnage in the crypto market. So let's talk about that right now. Well, it certainly was a rough weekend. And the reason for that is because we know we put in our big capitulation last Wednesday, I believe. And many people, including myself, believe that it might be over and we may begin our sharp descent back upwards. But over the weekend, we came in and we put in another capitulation. Didn't quite take out the lows, but we headed back to $31,000, which was maximum fear and pain, I believe, for the market. So I do believe that now the market is looking bullish. We are taking out this trend line. And we've come back into retest, and it looks like we're about to make a new higher high on the 8 hour, and this would start to look extremely bullish. And it does look like, famous last words, does look like the bottom is in and we can start looking upwards. But the question I've been getting from many people is, was this the top? Is the bull market over? Let's consult the halving tracker as a starting point. And this correction has brought us back in line with the last cycle very, very clearly. We last touched the last cycle around day 180. Since then, we took off and we went up very, very quickly. And what goes up quickly must come down quickly. And we've come back in line with the 2017 bull market. So until this model breaks, then we definitely don't discard it. And it looks like we are right on track. If we could rewind all the way back to the halving, this is exactly where we would expect to be. But there's another way that I want to look at this, and I've just been playing with this chart over here. So let me get it ready. I'm going on the log view just so we can see very clearly how the cycles fit together. So this is the complete history of Bitcoin. And with the purple lines, I've showing the halving. So the last one in May 2020, 4 years before, 4 years before. Right, so let me get rid of these drawings for a second. This was the bull market of 2013. And what I want to show you is that we went up very, very quickly, had a mini blow off top, and then had a long deep correction, and then had a second blow off top. So this was a double wave. And as we know in the last cycle, it didn't quite take place like that. We had more of a long, smooth trajectory up to the cycle peak. It looks smooth, of course, there are multiple 30, 40% pullbacks within here. And as we know, in the middle of the cycle, we did also have this 40% protracted correction as well. So looking from the halving of this cycle and seeing what's happened, well, what we can see is that we have had a sharp increase in the price, and now we're having a sharp correction. So there are definitely similarities with this cycle to the first cycle, where we had this steep increase in the price and then this steep correction. And as we know, there are also lots of similarities to the second cycle. So it looks like at the moment we're following a combination of the two. And we've been mostly focusing on the last cycle up to this point. But given the price action, I believe we now need to bring 2013 into play. So let's have a look at that in a little bit more detail and have a look at what happened in 2013. So from the halving, we had this sharp increase up here. I mean, it doesn't really matter, but we went up 20 times in the first part of the bull market. And then we had this steep correction. So from top to bottom, this was minus 81%, and it lasted 84 days, so nearly 3 months in the last cycle. But there's also another way that I want to look at this, and bear with me for a second here. But I want you to imagine, given how young and immature and illiquid Bitcoin was at this time, then this massive blow off top here, which was massive at the time. I mean, these candles, for example, 60% a day. Obviously, we haven't had that this time. I want you to imagine if this looked more like not having this blow off top, but just having some sort of consolidation period, up to this point here, and this being the local top in 2013. If we have that sort of pattern, then it starts to look very, very similar to both the last cycle, which was in 2017. And you can see that we just came in here to a top which wasn't as dramatic in 2013, and then we had our correction. So this was 39% over 36 days. And then in this cycle, we've come up fairly steeply, but we've consolidated at the top, and now we've come down 54% in 36 days. So let's bring that all together. So far we've been 36 days. We're hoping that's the bottom. In the last cycle, guess what? It was 36 days. And in the first cycle, if we take this top here rather than this, which I'm going to call some sort of anomaly. In fact, let me just, shall I? I'll put a box around it. I'm going to call that some sort of anomaly, because literally Bitcoin was $55 per Bitcoin, and somebody investing £10,000 in the market was probably having a big impact. Maybe not that small, but you know what I mean. So from this top here, if we take out all of this noise, then this was 42 days. We have 36 days, 36 days, and 42 days. Not only that, but from this peak here, the correction was 51%. So you can see the similarities here in this mid-bull market correction. And this is what leads me to believe that the bull market is far from over. In fact, I believe we are halfway through. What happened in 2013 after that? Well, after we put in the low, then we had a very, very nice increase and a blow off top up to the cycle peak, which was 18 times. And in the last cycle, after we put in the low here, we had a nice run up to the cycle peak, which was just under 10 times. And it remains to be seen what we have this time. But I do believe that there is no massive difference this time to the last two cycles. What else am I looking at here? Well, I'm looking at this low from in 2013, and I'm seeing that from the low, which was here, to the cycle peak, which was about here, that was 147 days in 2013. And in the last cycle, it was 153 days. See the similarities again, 147, 153. So we'll do a quick calculation on that. Between 147 and 153, so 147 would be the 13th of October, 153 would be the 19th of October, so call that mid-October. What does that mean we see next for Bitcoin? How do we get out of this correction? I see two possibilities. Number one is that we follow a similar path to the last cycle and to the first cycle if this was our low. And that is, there's a nice recovery, not quite to the all-time high, but it's a recovery, and then a little bit of sideways movement. That's here as well. And then we start making our new all-time highs. So that would look, my drawings are terrible, as you know, on here, but let me try. So if we, let's see, we put in our recovery, which we're doing at the moment, like this. No, let me try again. Bear with me on this one. So maybe a recovery like this, and then some sort of consolidation, and then heading up to our cycle peak. That's one option. The second option, which I don't think we can rule out, is this box that I've drawn in here. Well, let's imagine that it's not quite an anomaly because we're going to do something similar this time and we've only just started. So we've had our first big correction. We have a bounce, a further pullback, and then the blow off top. By the way, this is the sort of price action that people are talking about with the Wyckoff distribution. But even if this happened, it wouldn't be the Wyckoff distribution. It would be what happened in 2013, right? So if it is that, then that looks more like a recovery, a put in, and it wasn't quite a low. Oh God, here we go. It wasn't quite a low, but it was another pullback, and then heading up to the peak. Now, this is a terrible drawing because I've gone all the way out into January and our target is October, but you get what I'm saying, okay? It looks like it's going to take one of those paths at the moment, with the peak being somewhere around mid-October. I will, as it becomes more clear, I will set new price targets and timing of the cycle peak. But that's probably going to be in a couple of weeks' time. But what I wanted to show on this video is I wanted to bring 2013 into play because it's really, really useful for us now, and show that this cycle is far from over. We're about halfway through the bull market. And finally, there are some people that care about the RSI indicator. So I've just brought it in because it's very interesting. For those that don't know what it is, it just shows you if a asset is overbought or oversold. And what I'm seeing is right now, right now, the RSI indicator is as oversold as it has been during a Bitcoin bull market. So in 2017, we didn't really go lower than 44 on the index. And even in 2013, where we had the massive sell-off, we went down to 37. And right now the index is at 33. It would not surprise me if this is the most oversold you will ever see Bitcoin in a bull market, and therefore the best buying opportunity that you will ever have to buy Bitcoin in a bull market. So hopefully that can provide some clarity on where we are and some positivity on where we are, because it's certainly been a difficult couple of weeks for everybody. Well done for supporting each other. Thank you to our community who have been absolutely amazing in supporting each other. And onwards and upwards from here, I believe. And as well, I just want to note that everybody made mistakes in this in the situation that we just experienced, and everybody makes mistakes throughout their investing journey, particularly in crypto. There are so many mistakes to make. The important thing is that you recalibrate, you understand how and why you made those mistakes, and therefore you're in a better position for the next time. So I look forward to seeing everybody on the Ask Me Anything tonight, and I will talk to you then.